Hi guys, today I'll just take a look at Bitcoin and my thoughts about it. I will tell you guys. So in the grand scheme of things, when we zoom out on the daily chart, I believe that we have made a 5 move down. The exact count doesn't matter, but possibility could be like this. Maybe like these 5 waves. How it exactly is doesn't matter. What does matter is that I believe that what we are currently in is a correction. Something like ABC. And I already made some short-term analysis about this, which I'll show you now here. Let's zoom in. So, first of all, I believe that we are in the wave B of a zigzag correction, where the B wave consists of 3 waves, as always. Maybe I'll delete some to make it more clear. So this dark blue line, this is the major B wave, and it consists out of this ABC in cyan, this one. So we're currently in the forming of the wave C inside this wave B, and I'm trying to compute where or project where wave C could possibly end. So I'll get back to this one. So now I'm looking at this wave C, this smaller wave C, the cyan wave C, and I drew the 5 waves, because the C wave always consists of 5 waves in any correction. And then I would say this is wave 1, this is wave 2, like here, and this one, the explosive one, is wave 3. Wave 4 is either till this, or it is still going on. I personally think it's still going on, so for the immediate short term, I think we see more upside. And afterwards, we see wave 5. I'll go back once more. So to calculate or to approximate where wave 4 will end, I take the retracement of wave 3. I'll just do it again. From the start of wave 3 to the end of wave 3. And we first tried to hit the 0.236 Fibonacci level. We did get rejected, but not strong enough yet to start wave 5, as it didn't make a lower low. That's why I think we might see higher until the 0.382 level, this one, which is the next significant level. Because wave 3 is extended, the most common level usually is 0.236, so there's still a possibility that it could make a movement like this and then go down, but I don't like the odds of that, so I'd rather wait for it to break this level and then go to 0.382 and there possibly start a short trade. Let's see if I get more. Yeah, here. Another reason why I think the 0.382 level is more safe to start a short is there's a bit of confluence with previous support, which now is resistance. This red box. It overlaps with the 0.382 level here. So that's what I'm assuming now. And if that happens, if I get the short, I put the stop loss around here. Because first of all, I'd like a risk-reward ratio of 3 always in my trades. And second of all, I put it above the 0.5 Fibonacci level retracement for wave 3. That acts as a last measure in combination with this previous area of support, and now flip this resistance. With this information, where I think wave 4 will end, I can also in advance make a wave 5 prediction, which I did here with these boxes. First of all, I have this black box, which is the wave C projection inside the bigger wave B projection. What I mean by that is, let me clear these drawings and just do it again. How you can compute wave C is by taking the Fibonacci trend extension, grab it from the start of wave A. So we had this, let me label it again. We had this one, ABC. Then grab this tool from the start of wave A to the end, and then compute it on wave B. And targets for wave C are the 1.0 Fibonacci level, 1.382 and 1.618. These three levels are key, which is where I put my black box. I'll go back now so you can see the black box, which is here. But of course this is not accurate enough, so I try to find confluence with different projections. And then I have the purple box, which is the bigger wave A 0.5 to 0.618 retracement for wave B. So what that means is this, where we zoom out and we just simply take the start of, well, first label it. So I think this one is the bigger A, and then B is over here, and then C. Give it another color, normal. Yeah. So this is our ABC in the grand scheme of things, with a smaller ABC inside the B wave, and an approximation of where B can end is in a zigzag, at least, only in a zigzag, is take the start of wave A to the end of wave A and look at 0.5 and 0.618 levels. I'll go back now. So that is the purple box, the 0.5 and 0.618 retracement of wave A for wave B. Then I have the orange box, which is the 0.382 and 0.618 Fibonacci levels extension of this 5-wave structure inside the smaller C wave, inside this big B wave. So a bit confusing now, I can understand, so I'll show you. So we had this A, B, C, and I could count like 5 waves like this, and then I simply project where wave 5 will end by taking again the extension tool, starting from the start of the impulse to the end of wave 3 and compute it on wave 4. And now you need to look at 0.382 and 0.618 levels. That's where I put the orange box. As we were speaking, it did make a lower low. So that means that this was wave 4. And this short trade can go into the bin. No problem. Then I will look for a long. So I can delete this. And I need to, let me see, the purple box is the same, the black box is also the same, only the orange box it needs to be redone. And this red box is depending on these boxes, so I delete it as well. So I do it again. Take the start of the impulse to the end of wave 3 and put it on wave 4. Then I'll mark this area with a different color, orange maybe. Yeah. And this now becomes an area of interest too long to get this bounce. Let me remove some of these tools because I computed this orange box already. And now maybe what the possible trade could be is like around here, and then put this stop loss beneath these boxes. Maybe go up a little, like this. And I always in the trade look first where the risk reward ratio is for 3. And around this level I could see it coming back, yeah. If luck is on our side, it could also happen that this really is the bottom and the end of wave B, and then we can do something like this, where wave C will. And this is just a not even approximation. I put it somewhere random. Okay. If wave B ends here, where we marked it, we could also already compute wave C in advance. So we take the extension tool, grab the start from A, the big A, and compute it on B where we think it will end, around here, I think. Just above our orange box. And then look at the 1.0 levels, 1.382 and 1.618. I always like to put this wave C in the middle of these three, because it's such a broad approximation, you don't know exactly. But the safest take profit is around here in the long term. So that will mean that you get a pretty nice risk reward ratio depending on how tight your stop loss want. You can also put it below this lower low. But if you want to play like risky, you can put it under these boxes. But I personally don't like to have high risk reward ratios for my trades because you often lose them. But we will see depending on direction here. Yeah, this is definitely wave 5. I will put a long order now, actually. That was it. Just so here. And then here. Let's give it a bit of space. Like this. Maybe more. I always like to look at lower lows. Previous lows. Where I can compute or use it as some sort of last resort support. So around here. And then the short-term trade could be like this, and the long-term trade could be till this one. Yeah, that's it. Bye guys.